Yesterday, the US dollar was ready to hit fresh two-year highs amid the threat of tariffs on the goods from Canada, Mexico, and China. However, as expected for the US president, trade threats are primarily a tool of pressure. After negotiations with the leaders of neighboring countries, he decided to suspend the planned tariffs immediately. To be more precise, he paused them until early March. So, market attention may shift back to early February's economic data and its influence on currency trends. You are watching a video review of our traders calendar. Crude oil inventories are also a powerful tool of influence. Donald Trump intends to use it to the fullest. The first goal is to increase U.S. domestic oil reserves. Wednesday's reports, which record last week's data, should show how successful these new plans are in practice. However, morning figures may be incomplete as they are collected voluntarily. The reports released 18 hours later, however, are official. According to forecast, the crude oil inventory report from the U.S. Energy Information Administration may unveil a decline in reserves almost 4 times smaller than the previous week, around 900,000 barrels. Naturally, oil will react to this report with either growth or no at the least increased volatility. It's worth noting that Wednesday's economic calendar is particularly eventful as final business activity figures are released across Asia, Europe, and the United States. Other important data influencing currency exchange rates will also be published. For example, Japan will release wage growth statistics. According to forecasts, the indicator may rise from 3% to 3.8%, and this means that the Bank of Japan will have an incentive to raise rates, and the yen will have a reason to strengthen against the greenback. As for business activity, China's indicators are still in the expansion zone, that's above the 50-point threshold. However, the problem is that the composite index, which simultaneously accounts for economic conditions in both services and manufacturing, is steadily declining toward this threshold. In November, it was about 52 points, in December about 51 points, and in January it may barely hold about 50 points. For the yuan and the oil prices, this report could be a reason for a decline. Tracking the movement of Germany's composite business activity index, we see the opposite trend. It was at 47.2 points in November, rising to 48 in December. So, if the German composite PMI climbs to around 50.1 points in January, thus crossing from the contraction to expansion, the euro is likely to gain value. Economists expect the Eurozone composite PMI to rise similarly, reaching an even higher level of 50.2 points. If so, January will mark the third consecutive month of economic improvement in the Eurozone. It's a positive news for the euro, especially given Donald Trump's pending trade tariffs against the European Union. On the same day, the Eurozone will publish its data on the Producer Price Index. Compared to last year, the figures are still negative, but the decline is much shallower. The rise from a minus 3.3% to minus 0.1% is impressive, meaning the euro is set to strengthen despite the still negative reading. Typically, the first week of the month sees U.S. labor market reports, while these figures have been somewhat overshadowed by the president's auctions. Each report still serves as a preview of a January Nonfarm Payrolls data slated for release on a Friday. U.S. private sector employment data could boost the dollar if the indicator increases from 122,000 to 149,000 as anticipated. In contrast, the US Composite PMI may drop significantly by 3 points. However, the indicator should remain in expansion territory at around 52.4 points. Given Donald Trump's plans to lead the country into an economic golden age, this is a weak start. Perhaps the next period will show research. For now, though, the US dollar may weaken amid this report. Several speeches by the key central bank officials are also expected throughout the day. The speakers are Philip Lane from the ECB's Executive Board and Federal Reserve Vice Chair Philip Jefferson. Comments from financial policymakers typically trigger volatility in the currency market, as they may hint at future rate decisions. Please note that the time of publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on Wednesday, February 5th. So that's all for now. We continue to follow developments in the financial market. Subscribe to our channel and follow news with us. See you!